Hey guys, Jason here for TheChartGuys. We're going to do a follow-up video to yesterday's TCG tickers. Start with Snap on the hourly time frame. Yesterday we were concerned about the fact that the hourly time frame, although the hourly uptrend was intact, we were getting overextended. And we opened overextended, bulls hit a double top, and then we lost a pre-market level in the 5-minute time frame. If we go zoom in and take a look at what that looked like, a little bit of zone of support was established here. We lost that pre-market, weren't able to change the 5-minute trend. We saw a drop, which changed the hourly trend to a loss of 25.03. We saw a overall, this fits the bill for what's called a descending scallop, which you get a drop, a nice rounded bottom, and then you resume that downtrend. Now the downtrend here that's happened in the last little bit of the day, this is just due to earnings, so it is not a continuation of this pattern. It just happens to line up pretty well. The earnings drop itself, though, is substantial because we've lost to 23.02 support. That was the daily uptrend higher low that we needed to hold. So we are currently seeing spike below 23.02, which sets up a high, higher high, lower high on the daily time frame and knocks out a major support level, and it sets us into what is going to be a daily downtrend. Now what happens in the next couple of days is really going to define the short-term future of the Snap chart. If we follow through on this daily downtrend, we have support levels to look at the low of 23.02. And then finally, way down here, some more support at 1964. We have to allow the price action to develop following this big earnings drop. And we need to wait and see and react to what happens next. Right now, the daily chart says lower lows, lower highs. So we're taking a look at Tesla now. Yesterday, we talked about the fact that we were overextended in the hourly time frame following this beautiful tightening range. The problem with being overbought in a position of a bull flag, which is what this sort of was here on the hourly time frame, is that if you're already overextended and you used your last gasp of strength, it adds a little bit more power to the bears, and the bears certainly stepped on the pressure in today's action. Now we shouldn't be too concerned because so far this is still healthy consolidation. What we saw was an overextended move in the open. We saw weakness out of the gate. We saw the development of a beautiful 5-minute descending triangle. Here's our high double bottom at 1602. 5-minute lower highs consistently lost at 1602 support. We see a 5-minute oversold. The volume really picked up here on the break of that 1602, and we've maintained a 15-minute downtrend throughout the day. So what we do have is a nice support level here at 1558, nice double bottom. What we need to do is lock in this hourly higher low. If we can change the hourly trend here, that will fit the bill perfectly for setting a 4-hour higher low for that upside continuation. So this is the part where it gets a little bit scary. When you're looking at this, you say, man, this is going down. This is not a good time. I don't want to buy this. But really, this is this sort of scenario where you're looking for that entry. You've already proven your strength. Now you need to consolidate, set your higher lows, and look for upside continuation and catch the bottom of that little bit of a low swing here. All right, we're looking at NIO as well. And what we were looking at was the fact that we were coming up on 1339 resistance, and we opened above that in our pre-market session. Unfortunately, we were overbought. We set a higher high, and then we saw some weakness for the duration of the day. 5-minute time frame shows that weakness with a loss of our pre-market levels, a failure to resume a 5-minute uptrend or even set one up, and we saw 5-minute lower highs and lower lows for the majority of the day. Even when we tried to establish higher highs, we really couldn't get past that key resistance level around 1305, 1306. And we basically just went sideways for the duration of the day, still maintaining a high above the low of day. So what that says to me is healthy consolidation so far. What we need to do here is take the work that the bulls have done early pre-market, set that high, and establish a base of support here right around, well, let's go grab that level, low of day, 1262, and then try to establish an hourly uptrend from here. Bulls have already proven that they wanted to go in that direction. We're consolidating nicely. If we go to the daily time frame to get a read on that bear volume, it's not so substantial. So we need to get that base of support going. We need that daily higher low, and we need to see the hourly trend go in toward the bulls. Still, however, looking for a lower high under 1644 at this point. In a similar fashion, the FMCI bulls managed to get an hourly trend change. We saw that yesterday, and now we are starting to see a little bit of a slowdown, still holding EMA 12, still looking for a higher low over 1356. What we're going to do is look for that hourly higher low to form. We need to see this hourly downtrend that we're currently looking at, which is really more of a sideways 15. But should we lose this 1461, what we're going to look for is a 15-minute trend change, an hourly trend change somewhere over here around $14 would just be absolutely perfect. And that would give us a 4-hour higher low. with which we can try to get a little bit higher and see if we can't get a better higher low under 16.99 or that 17 psychological number that we talked about yesterday. So what that would look like, we're going to draw that out on the chart here. 4-hour higher lows into a 4-hour uptrend. Then we're going to look for resistance on the daily, try to establish a daily higher low. And then after that, who knows what's going to happen? Maybe we get a higher low, maybe we get a lower low and confirm and actually resume that daily downtrend. If we get a higher low, it opens the doors for the bulls to possibly break that 17 on the next attempt. CRWD bulls gave us a little bit of a mixed bag as far as action goes today. They opened higher, were not able to sustain that high. We saw a very quick flush early on. Let's go to the 5-minute time frame to check that out. So there's that open high. We see a very, very quick flush, just touched 30 on the RSI. So a psychological bounce off the almost oversold condition, and then pretty much just went sideways for the duration of the day. What does that tell us? Well, it tells us on the hourly time frame so far we are holding relatively strong. What we need to do is establish a 4-hour higher low. Hourly is looking okay, but it hasn't really changed the 4-hour trend yet. This quick flush to the downside doesn't establish that for me. What I need to see would be a higher low and then a higher high on the 4-hour time frame. That would allow us to consolidate a little bit more on the hourly. We would look for a loss of the low of 104.44, and we could even do that going sideways, but ultimately we want to see a little bit of weakness, just a tinge of weakness, which will give us a 4-hour higher low, and that would be the best case scenario. Now, bulls completely shake that off. What are we going to look for? We'll see where we end up in pre-market, but if we can get over top of the high way up here, 108.83, sideways action in the pre-market and taking out that key resistance, I think bulls would have a lot of potential here to just keep going, and who knows, maybe this is our hourly higher low. We need to speculate on all possible outcomes, and we need to react to whatever the charts give us. So that's why I spend a lot of time looking in all directions. What is going to happen here? What could we possibly expect if X happens, and how will we react to it? That is really the fundamental aspect of technical analysis that we try to teach at TheChartGuys.com. If you want to learn more about preparing for scenarios, check it out. Let's see if we do some more tickers in another video.